Good evening, all. Ira Epstein with your Spider Stock ETF wrap-up for this Tuesday, the 26th of September, 2023. Time right now, we're well after 6:30 in the evening. All right. There's word that the Senate has come to a deal that needs a vote on, but it looks like they've reached a compromise, the Senate, on what they're going to pass to the House, but I don't think it's going to make muster there. Apparently, they'll continue aiding Ukraine. They want disaster relief because of the fires, the hurricanes we're getting. They're going to put that in, but I don't see any cuts to spending. And for the hardcores in the House, that's just not going to fly. So they will do all they can to keep it from the floor for a vote or threaten to throw out McCarthy, one of the two. Will the moderates step in and help McCarthy and cross lines with Democrats to pass, and then let the hardcores try to throw McCarthy out and see if they have enough votes to do it? I frankly don't think they do. I've all the way through thought that there will be a move to get rid of him by the hardcore. And maybe this is the time it's got to happen, and then you'll get 45 days where you try to figure something. Today we made history. It's the first time I've ever seen a president join a picket line. How desperate can you be for the vote of the union workers? And again, he's lost big oil. I promise you the man has lost big oil when he got rid of the pipelines and tried to take leases and everything that was in place already from them. And now what he's just done is he has alienated the big three. They'll never say it, but they know it. They can't count on this president. They won't count on this president should he need them for anything. I don't know that he needs them for anything, but should he need them? Oil he needs. Not going to get what he wants. Okay, they'll have all the reasons, but at the end of the day, they're public companies. They are not government companies. But we're trying to be a whole different world or other parts of the world. So, how will the stock market react to that? Probably a little positive for a bit. Wouldn't surprise me. I mean, at the end of the day, we're going to get a budget at some point. And in order to get to the point where you get everybody serious about it, you're probably there. Did Congress waste 90 days? You know it. I know it. They're not competent. You vote them in, I'd throw them all out. You've heard me say that for 10 years as I've been doing these videos. I think they're terrible. I think there should be an age restriction. I'm very tired. I think that nobody over 70, I really believe that that's the right thing, should be public office. I think there's an age that maybe that's it. I've been thinking about it. I'm beyond that, obviously. And I do think it's time for younger people. I was watching today Barry Diller, and I think he hit it. I think he's right. And, you know, the youth has to run it, and the old guard has to give it up. And they won't, but they have to. And I think term limits should be on everything. All right. I believe 2 terms is enough to accomplish anything that you need to do in public service. And I think career politicians do nobody a favor. Okay, just my opinion. Radical, yes, but I'm entitled to my thoughts, okay? And that's it. And it goes this way whether you're a Democrat or Republican. And by the way, I cross. I'm not a hardcore Republican or a Democrat or anything. I vote for what I think's right. Could it be any clearer than that? So I decided to keep BND because it's also exciting right now. I was going to take it off, but nah. These are the markets that are going to react immediately to if there's anything really going on with the budget. We know that the market's waiting to see when the Fed, or you know that, and I know that, will raise again. That's the fear that everybody has. Kashari came out, and what did he say? He believes that we have to have one more raise. I read about it today. We'll see. But he's one voice. There's many other voices. There's 19 members, so we can hear from everybody. Lower highs, lower lows, still bearish, well under the 18-week average. Now, stop where you're at. Question for you. If you followed one of the guides that I teach here, does it help or hurt you? One of the things I say is when you're under this red line, the line in the sand, the 18-day average of closes, I immediately have a bearish bias or a bullish one. I think it keeps you safe because you're not trying to be a buyer here. I know eventually you're going to tell me, oh, I bought it right there. Of course you bought it right there. And of course you sold it up there. I know you did. That is what you're looking for. You're looking for that filter to get you to the area, if you will, that you're not trying to be the bottom picker in the market, because bottom pickers don't survive. It's that simple. I mean, where did you start buying this one? Over here, here. But remember, my work is saying you're looking on the short side. Now, you can tie together other things where you cover shorts. That's buying, but it's not going long. That is a whole different type of buying. You have in BND still an embedded reading that's bearish. When the red line's over 21, I no longer want you short. Can I be any clearer? Until that occurs, I certainly tell you never to sell under a Bollinger Band, because only 5% of the time do you stay above or below it. You tell me. I'll give that up to be on the safer side here. And you look at your other work and it says, oh, maybe I should do it at that point. The markets always go to an extreme and they turn. And when they're embedded, that pulls that rubber band so much that you get to see what's happening. But until it's lost, it ain't lost. And when it ain't lost, I love that word ain't. I used to write it and my English teachers would yell at me. But it is American grammar. You take a look at it. Keeps me, I think, honest as a trend trader. Now, I like Rivian, I like Lucid, I like Fisker, I like all three of those companies. You've heard me say this over and over. If they can survive, and they're showing right now that not only are they surviving, their production numbers are going up. They're pretty neat cars. The other afternoon, I was parked next to the new Lucid. I loved it. It's so gorgeous. It's a beautiful looking automobile. This one was the 1,000 horsepower. Can you imagine putting your foot down and going in a 1,000 horsepower vehicle? I've been in Lamborghinis that have been souped up. I have a friend that had, I think, the fastest straight line title. He lives in Dallas, of a Lamborghini. One of my friend's sons, he's not a youngster, by the way, any longer, but that he had it. And the things, I think the horsepower was near 2,000. It's insane what he did with it. Then he built the Lamborghini parts where he manufactured them, and he's out of all that. He's an airplane guy and owns his own planes. It's crazy. But to make a long story short, I couldn't imagine hitting that. I've been in the Tesla Plaid, and I was scared to death. But in any case, lower highs, lower lows. Well, you're coming to the resistance. At some point, this market is saying to you, okay, maybe there's value. And remember, they're fighting a huge headwind right now, and that headwind is high interest rates, very high interest rates, a public that maybe the consumer is tapped out right now. I happen to think they are. I think they're diving into their savings more and more, and I think all of this high interest rate, big credit card balances, it gets painful after a bit. Gasoline and so on, okay. We might be coming to the end of the break here. Each time we've done this in the past recently and gotten near that Bollinger Band, the market has had a sharp turn away from it. Pay attention to what's going on in Cushing, Oklahoma, the U.S. storage facility. The amount of oil in there is dangerously low. I mean, real dangerously low, to the point where taking the oil out because you don't have more of it in there is turning into problems. The grading of it might be a problem. And then what happens to the facility, because so many of these facilities count on the pressure of the oil on the sides of the walls doing certain things. It is down, I think, 2/3 or more from its capacity and one of the lowest levels in modern time. I just read this tonight. That is scary. So everything it serves could be a problem. But that's our wonderful president. In part, he's got this phenomenal energy policy. Lower highs, lower lows, down underneath the Bollinger Band. You can see where you're at, fighting with it right through there. And by the way, did you see how Trump did today? Another victory. Yeah, the judge, he's all full of fraud and everything else. I mean, these two guys, we can't do better in America? Lower highs, lower lows, keeps coming down through here. All right, by the way, let's come back here. It's fully embedded still. So the industrial sector, and today we saw the Richmond numbers, they were good. I mean, it's the first set of good Richmond numbers. I want to applaud it, for real. It just can't, I think it was 15 in a row of terrible numbers. This finally looks like everything finds a floor. Let's hope it's, you can wobble here, but maybe it's the beginning of something for them. Disney, no, it looks terrible. It looks terrible. I know what a great company it is, but this is a company that's just now come down, roughly, 7-8% in value. It's getting hit pretty good. Then we get to RSP. This is one of the things, and should be for you one of your warning lights. When you see this thing coming down, this is a market that in August, I'm not taking you back far. In August, you were near the 150s. You are now 140, okay? So that's another 8% drop, but you got to be concerned about the consumer. Where are they at this point? Now, the home builders were sort of flattening out, but you have a bearish embedded reading. I would never think of getting friendly or coming out of shorts until you lose that with the red line over 21. But what I teach my clients to sell short, if you will, when you do certain things. I don't want to sell short if you make lower lows. But I certainly am looking for a rally. And you got to get nervous if the 18-day average in red gets underneath the 100. It means you're even going down for one more time. Now, what we did see in the home builders is their supply went up 5 months. So when you look at how many months of supply had increased a bit there, they need that. That gives them bargaining power because people that are in older homes, what I will call used homes, how's that? They're not selling them. And as long as they don't sell them, you're going to get prices going up. So these are the guys that have a brand new spanking home. They're waiting for you to come in and make a deal. Hi, Harry. Sure, I got this car for you. You understand what I'm saying. But they do have them, and that's the good news. In XLE, the market's oversold, coming down. I don't believe this is going to be much of a downtrend that lasts because I bet on, and I'm with what OPEC's doing. They are not going to deviate. Now, what can hurt them is they may have to cut more if the economies of the West and China continue to weaken. That would be a problem. China's the wild card. They bought an awful lot of oil. How much more do they need is the question as their economy is slowing. And then what do? India's bought a lot of the other oil. So you've got sources there, but we'll see what happens. Now, if they produce less and less, and Russia claims it is producing less and less, that takes care of demand. In GLD, I'm going to repeat. It's very difficult to tell somebody to buy gold or precious metals, period, when you have 5.5% short-term rates and a dollar that's through the roof. Why are you buying the metal? Buy it at the turning point. I don't know where that point is yet, but the turning point. Now, if you think this is the turning point in gold, well, I guess this is where you're buying it. But I'm not seeing anything on that chart that says it's a turn up or down. In fact, it hasn't gone anywhere. What if I tell you this is basically a sideways market? And if you really study it, that's been the surprise. These high interest rates, the strong dollar hasn't broken the gold market. I know you're going to tell me, oh, it's 176, Ira, and back here it was in the 180s. Yeah, but I can go to the cash gold market and prove to you, no, it really hasn't gone. A lot of us, me included, thought gold would be a lot lower. Something positive is going on in gold if it doesn't break down soon. In SLV, the battleground's been the 18-day average. It came to the Bollinger Band, the bear market rally, and it's fluttering. It's not going anywhere. There is no trend that I'm seeing there. Copper, I don't want. I know there's going to be a copper shortage, and I mean that. There will be a copper shortage. I know that when China awakens, the great giant comes back, there will be demand for the copper, but it ain't here, it ain't now. There's that language again, and that weighs on this market during it. So you got to go through the cycles in it, all right? Is it embedded? No, it's oversold. Probably get a bounce out of here at any point. TLT, BND, no, I'm not friendly. I mean, until I have reasons to see that the market is bottomed, why? Yes, you'll get short covering bouts, but I think they're to be sold into until you lose the embedded reading with the red line closing over 21. In UUP, this is a bullish embedded reading. Now it's up to the Bollinger Band this is where I teach that the pros take some money off the table, not their whole position, and they get ready to buy on the breaks until they lose that embedded reading. And the flip-flop's true in FXE. You get to the Bollinger Band, this is the area to cover shorts, waiting to sell further rallies until the game loses the embedded reading. But how do you pick the points to come in? I have that in the course, but sometimes those points aren't hit. So I rely on another tool if I'm desperate to get into the market. And that tool is called pivot points. It's the formula. I have a three-part video series for you. It is free, by the way, that teaches you how to do it. That white line's the pivot. And then from there, what the market does is you have a formula. And the formula is really easy. You know, I keep hitting, I think, the wrong button here. There we go. And in that, you get what's called R1, R2 above the market, resistance point 1 and 2, and then under it, support 1 and 2. These are the supports, S1, and the lower ones, S2, R1, R2. And the center lines here. As the market's coming up to this, you're in sell zones. As the market's coming down to this, you're in buy zones. But what triggers when they actually make the turn? What I learned is my slow stochastic study. So I teach you how to put it all together on a chart and look at it. Now, what's it used for? You can use it in one of two ways. Some people love to day trade with it. Others like to finesse a position they might want to enter for, be it a swing trade, which is a couple of days in the market, or a longer term trade. But the charts typically use a 15-minute bar chart. Keep that in the back of your mind, how it works through there. I teach you how to set everything up. It's free. IraEpstein.com, free offers. Move up here your cursor, IraEpstein.com. And also, free. Take the course on the Arun indicator. Once you learn those, then step to my other Pave courses. I think you'll find them fascinating. I'm Ira. Thanks for watching. I'll see you tomorrow.